Set it up perfectly for us. So how are investors responding to all this? Deirdre Bosa joins us now, along with the aforementioned Dan Niles, who says Apple is his single largest short. Deirdre, over to you.
Yeah, his name mentioned a few times in the last segment. So, Dan, we have you now on the line of Satori Fund. Thanks for being with us. You outlined a number of reasons why you're short, including those latest reports from China and, quote, no AI play. In your view, what is the biggest risk to Apple at the moment?
Well, it's the one thing that hasn't come up in this last segment, which is what's the risk you're taking on for owning it? And one way to measure that is what's your PE ratio and what's the growth you're getting? So if you look at it from that standpoint, you're paying 28 times PE for Apple. Revenues grew 2% last year. They grew 1% this year. And you can buy the S&P at 21 times. So the multiple, if you look at it, is actually expanded about 7% from 2 years ago, while the revenues are dead flat and the EPS is down. Now, by the way, if you think that's an aberration, if you go back to before COVID, Apple's revenues were down in fiscal 19. COVID just supercharged that revenue growth. And by the way, the 4 years prior to COVID, smartphone sales were down every single year, year over year, for the industry at large. So Apple really has benefited tremendously from this, from COVID and everybody having to buy an iPhone or a PC. And if you compare it to the other mega cap stocks that are comparable, so Google, Microsoft, Meta, their revenues are up between 10 to 22% or so over that same 2-year time period. And their multiples have actually gone down about 7-8% or so, as has the multiple for the S&P 500. So the risk is something that I know nobody cares about risk anymore, with the belief that the Fed's going to bail you out every time the stock market goes down, or you're going to get stimulus checks. But that's the thing you need to think about, which a lot of people aren't.
Well, that's why we have you on, Dan, to highlight some of those for us. So I think what you're saying, though, is that over COVID, consumers were purchasing goods over services, and you're saying that that's going back. But what do you make of the argument around Apple that it's no longer reliant on iPhone sales, but it now relies on its installed base of over 2 billion devices? So its thesis going forwards is actually about that services side of things, which has been growing.
Well, you got to remember, Deirdre, they had a big install base in 2019 as well. And their revenues, when you include the services growing really fast, was still down that year. So you can say services all you want, but here's the thing. Where's their growth coming from? It's coming from emerging markets. So if you look at China, where they're expanding into, the GDP per person there is much lower. They're not going to be buying as much services. They're going to be buying more of the lower end of that lineup. And so you have to put it all in context of, you can say services a lot, but what is it actually doing for revenues and earnings? As I said earlier, their revenues and earnings are exactly where they were 2 years ago. The other Magnificent Seven, by the way, you can buy it in much lower PE. So you can buy, Google or Facebook, or Google and Facebook in particular, at 23, 24 times. The S&P is at about 21 times. And you're getting between 8 to 13% revenue growth from both of them. We don't own Microsoft for the reason that it's at a 32 PE, but its revenues at least are growing 9%. So I think you have to balance all that. And by the way, we own Meta, Google as well. Intel's our largest position right now. We own Amazon. So we like big cap tech. We just don't like Apple. And we have a note on our website that goes into all the details around it. But if you think about the fourth quarter coming up, which is a retail quarter, you've also got 40 million student loan repayments starting on October 1st. And the price of the iPhone is probably going to go up. So that's not a good mix in my mind when you look at it and you put in the PE and the growth rate.
It's Kelly here. I just want to jump in with 2 quick questions that are related. One is, what's your dating history with Apple in terms of shorting it or being long, or just kind of track record? But the second is also, I don't hear much of this conversation focused on China. I hear you talking about valuation, and maybe that's going back to historical, U.S. student loan. I mean, is China as a risk something that's entering your investment world or not?
No, absolutely. That's why if you look at our latest set of tweets, Kelly, I was just sort of mentioning valuation because it hadn't been brought up in the bull case, because you can't bring it up because there's no defense. But if you look at China, yeah, that's a big issue, because the thing people forget is Huawei was 19% of the global smartphone market at its peak in, I think, the third or fourth quarter of 2019. Then the sanctions came in, and their market share literally went to, just collapsed. Now they've got their first new flagship phone since 2019. I don't think it's a coincidence that the Chinese government, at the same time that flagship phone is coming out, is talking about trying to, restrict government employees and state-owned entities from having iPhones at work. And so you put that together, and Apple being 19% or so of 19% of Apple's sales coming from China, this is a huge deal. And that's why in the post we put out yesterday, we said, we always got this new phone coming out. We're selling our long. Our plan is to get short. And as we thought about it more during the day, given the valuation differentials and what we own in big cap tech anyway, we're like, this is a perfect short against the longs that we have. And so that's why we put it on. So the catalyst is really China. Nobody cares about a valuation until the stock starts going down, and then people have to do some homework. And so that gives you the downside risk in the name.
All right. We'll leave it there, and we really appreciate it, Dan and Deirdre. Thank you both for joining us today on a pretty impactful day for Apple and for the market as a whole, we think. Dan Niles and our Deirdre Bosa.